You're listening to Bottomshelf Bitcoin. This is episode 22.
Relax. Enjoy your coffee. Okay. Good morning, everyone. Take a chill pill. Okay.
Hey everybody, welcome back to another episode of Bottomshelf Bitcoin, the podcast that puts Bitcoin knowledge within everyone's reach. As always, I'm your host, Josh Humphrey, and today my guest is StopAndDecrypt. He has written several articles on Medium lately about the centralization of Ethereum, and I mentioned those in a couple episodes ago, and so he has agreed to come on the show and kind of talk about that subject a little bit more. So welcome to the show.
Hey, what's up?
All right, Stop. Before we get into kind of the stuff about the articles you've written, kind of share with us your, as much as you're willing to, right? Because we're trying to respect your privacy, but your kind of your background story and how you got into Bitcoin, your Bitcoin origin story, I guess.
Yeah. So I guess when it comes to my personal life, I don't consider anything outside of the Bitcoin space to be of any real significance. I'm just a normal person, except for the fact that up until relatively recently, I just was not the kind of person that was, I didn't live the lifestyle that was conducive to saving or investing. I was very distracted up until very recently. As for my Bitcoin origin story, I don't think it's anything special. Most of it really involved just paying attention to the price, not the tech, in the beginning at least. My memory is a bit fuzzy. Like everybody else, it was probably a Slashdot article that drew my attention to it at first, and I know that it had to be sometime in like 2011 because I have some old confirmation email from that time for the mining pool bitcoin.cz, which is actually what Slushpool is now. So there's that. Unfortunately, I'm not rich despite that because the potential profit for me mining with my CPU would have been like $10 a month because it was 1 Bitcoin a month, and I mean, at the time, it was worth nothing. I didn't care. So I completely forgot about that until a few years later.
So do you have all that like saved somewhere, or you sold it off?
No. I never actually did it. I mined for a couple of days. I was like, this is just not worth it. I didn't want to do it.
Oh, and so you stopped.
So I did stop.
So you could have been, but you're not.
Yes, I am not rich. I could have been rich, but I guess that misses the point, though, right?
Yeah, I'm the same way because when I first bought in, I didn't realize it at the time. Apparently it was in like the, 2014 bear market. And even at that, I was like, and then it started going up and I was like, well, I'm priced out now. I guess I've got what I've got.
Yeah, that's another
And
thing.
now I'm like, oh, it was tenfold cheaper.
Yeah.
So anyway,
I came back in around 2013, 2014 while it was going up. But, I was not sending money overseas. It didn't seem like something that was still worth it. I had no idea what I was looking at. I still didn't know much about it. And I was broke. I was in college. But I tried to get me and a couple of my friends to buy one of the Butterfly Labs miners. Mm-hmm. And I'm glad we didn't do that because looking back at how that turned out, we probably would have never gotten it. We would have threw money out the window.
Yeah. So when did it become important to you?
Well, I think it's a combination of other externalities. It's weird because you could have the right mindset but just not be in the right moment in time and it wouldn't work. Around it had to be late 2016. I'm trying to remember. I think it was Andreas's newest appearance on Joe Rogan because I looked it up and that had to be what it is that drew my attention back to the price. And I saw the price slightly recovering and going back up, and that made me check. And then as I checked on Reddit. I started reading Reddit, and I stuck around, and I said, this definitely seems like something I should be paying attention to more than just the price, because Reddit was talking about some of the things, and I kept reading, and then I slowly started replying on Reddit. And yeah, long story short, I had no clue what I was doing up until about 18 months ago, I think. 18's a year and a half, so yeah. I didn't start buying until January 2017, so I don't have much.
Yeah.
So yeah.
Well, cool. Well, that's an important point. Everybody listening, see, podcasts do make a difference. No. So you kind of read and respond on Reddit articles and some other thing. I've seen some other stuff even before this latest stuff on Ethereum that you had written on Medium. But what kind of has sparked your, and I'll link to the Ethereum articles in the show notes, but you've written two kind of massive articles on the centralization of Ethereum here lately. What sparked your interest in this?
That's an odd one because I don't even know what sparked my interest in writing the first article I wrote. And like that wound up being so much longer than I expected it to be. I wanted to cover such a small topic, and it just turned into something really big because in order to cover that small topic, you realize that there's so much other stuff you have to cover to explain this to somebody who has no idea what they're looking at.
I really appreciate that you did this much into it, even on the first one, because even for me, someone who is in Bitcoin and not, I don't claim to be some kind of technical expert. I mean, part of why I created this podcast was to force me to learn more to some extent. But I thought when you were talking about, and I guess this was kind of a separate piece that ended up being part of the second article, but when you're talking about, invalid blocks need not apply or whatever, and you explained mining so well. And even before I read that, when I read that, I realized, I up to this point had thought I knew what mining was and I didn't. So I think going into such detail, and I know I've been a part of projects before like that, where you start something. I have an old 3-wheeler in my garage, and I started taking it apart. And every time I took a part off, it's like, that piece underneath there needs to be taken off and cleaned up too. And by the end of it, I had the whole thing in pieces in my garage floor. So, I mean, I get that. Like you got to go back and explain this, and then you got to go back and explain that. But I really appreciate it. I think a lot of people did. So yeah, thanks.
Yeah, no, thank you. I've been getting some surprising feedback from it, and I never expected any of this to get as big as it did, to be honest. The first one I wrote about I think it's called "That's Not Bitcoin, This Is Bitcoin." It was just an article about arguing over semantics, and I wanted to touch on like the longest valid chains, like something very specific, and then it turned into this really long thing. But when it came to Ethereum, like my motivation for that, I saw Kevin Pham getting a lot of attention on Twitter going after Vitalik, and I thought, that looks like fun. I could do that too.
Yeah.
No, but I wanted to touch on why having an uncapped block size is just generally not a good thing. And it ended up turning into this long 2-part smorgasbord of subjects, basically for the same exact reason the first couple of articles ended up being so long.
How much time would you say you spent writing these cumulatively?
Cumulative, like every single one?
Well, the ones about Ethereum.
The ones about okay, if you combine them, I would say I spent half of my time on that article working on those diagrams, just messing around with the different minor variables to get things to look the way I kind of wanted them to, because there's no real way to picture the Bitcoin network or the Ethereum network. They were both just analogies to express a concept, So I would say I spent a day writing, but also a day just manipulating the numbers to get that Ethereum central network and the outer central network to look the way it did, just for no reason, because I felt like I needed that example to help portray the concept. But yeah, I would say two days total, 1 day writing.
The diagrams are really helpful too. I'm a visual person, so and all of this, is so. I mean, it's such a hard thing for so many people to get. Just explaining Bitcoin to them out, Bitcoin versus, quote unquote real money, cash, right? It's hard for people to wrap their brain around the intangible stuff. So anytime you can come up with a good analogy is really helpful.
Yeah.
So let's kind of, if you don't mind, let's kind of dive into the content. Explain for us briefly, because I don't want to go over every piece of your articles because that's silly. Yeah. Like, you can either go read it, or I think actually Crypt Economy has a couple episodes where he reads through them. So, if you just want someone to read it to you, go listen to those episodes. But yeah, the difference between what we call full nodes on Bitcoin versus what they call nodes on Ether, or even like SPV clients on Bitcoin.
the first thing I want to say is SPV nodes are not nodes; they're clients, and that's probably where the biggest misconception comes from, because people use the word node without defining node, and then it just convolutes the whole entire discussion, and then people compare different networks, and they talk about nodes on this network versus nodes on that network, and they're not in agreement with the terms that they're using, and that's the most important thing that needs to happen before you start talking about these things. So SPV in Bitcoin is a client. It's not a node because it's not communicating and sharing information with other requesters. So, and you know, I could be using the wrong terminology here as well. Like I don't see people going around saying requesters, but that's not the point. The point is SPVs request from nodes, whereas nodes share and request from other nodes. And the fundamental difference in Bitcoin is there's no difference between a node. Like every single node, and when you talk about nodes, they're all the same from the protocol perspective. They all go through the entire chain, they validate every single block in the chain, and then they catch up. Now, what you do with that data afterwards doesn't even matter. You could, like, there are pruning nodes, but that doesn't matter because you could throw out all the data, you still validated all the data. And once you're up to date, you're still getting transaction and block data, and you're still sharing transaction and block data. So I think it's important to understand that, because Bitcoin's, I think I went over this in my article as well, because Bitcoin is the most simplest of them all. It's just very straightforward. They're all the same. There's no difference. And then you have clients that request data, you know? Whereas...
Right, like a mobile wallet or something like that.
Yeah. So you have light clients like a mobile wallet or Electrum on your desktop, and then everything, and then you have nodes. Like, there's a clear difference. And we don't, like, conflate them. We don't confuse them. There's no need to. There's nodes and there's clients. In Ethereum, it's iffy because I think even now, I could be wrong with this, but if you download Geth now, the default is fast sync, where like the default is your software is a client. It's not even a node, but they call them light nodes instead of light clients. And I think that's where the biggest issue is, because then people argue over, you know, how many Ethereum nodes there are versus Bitcoin nodes. They argue over the functions of these things. And
I mean, they're creating a false equivalency, right? Like, so they're saying, oh, we have just as many or more nodes or whatever, but the difference is they're not actually, like, whereas a Bitcoin node, you're saying fully validates every transaction.
Yeah. It comes back to
these Ethereum quote unquote nodes, which are more like a Bitcoin client, they're not actually validating every transaction.
Yeah, it goes back to being on the right page with definitions before having the discussion. So it was important to express that, because I think that there's a lot of people who are misled, or they're not starting off on the right footing, and then they become, I mean, I don't want to use the term fanboys, but they become really like invested in a project based off of misunderstandings.
Yeah, I mean, and it can even be well-meaning, right? Like, they go and it's like, okay, now this is my tribe, this is my community. Oh, you're talking bad about my community. Like, I feel the need to defend my, you know, what I believe in, but you don't have that. They don't have that foundational understanding that what they're calling a node is not serving the same function.
Yeah, and I think it's fine to defend. But be on the right footing before you have some sort of argument over that.
Okay, now, and I'm really only asking you this because I don't think I fully understand it. Can you explain gas?
I could try.
In Ethereum?
I could definitely try.
Okay, go for it.
I guess I don't want to get into details, because the details to me aren't like there either. I would have to look them up.
No, just conceptually. Yeah. I don't...
Okay, so in Bitcoin you have transactions. In Ethereum you have contracts. Now, I mean, they're just transactions. They're just organized in a different way. Like, they don't have native multisig. You need to create multisig within a contract. But the point is, contracts cause gas to execute. And just like a transaction, a larger contract a larger contract is going to cost more gas, and blocks are limited to a certain amount of total gas. So let's just hypothetically say blocks are limited to 100 gas. You can have 100 contracts that cost 1 gas each, or you could have 2 that cost 50 each. If you have 3 contracts that cost 50 each, only the 2 highest bidders are getting in first, and then, backlogs build up from there, or like they just have to wait. So a fee market develops in the same way. So the people who pay fees get ahead of the people who don't pay fees, and the more people that try to submit contracts results in a larger and larger backlog until that can be processed. So there is a limit to gas the way that there is a block size limit, but there is some fundamental differences because there's a hard cap on the Bitcoin block size and there isn't a hard cap on the gas limit. It's dependent on some sort of moving average. So when it comes to Ethereum's gas limit, the exact details I can't be accurate about because I don't know them, but there's this moving average of what the block size was in the past X amount of blocks, and the current block can be, I think it's either 1.2 or 1.5 times the size of that moving average. So over time, if you just keep on doing that whatever it is, that 1.2 more, and you consistently do that, the block size keeps going up because the gas limit keeps going up. And if you're a centralized miner who has control over a majority of the network or has control over a significant amount of the network and other miners just don't care, that block size can just keep on going up and up and up. There is no real limit on it. You don't really see that happening because there's no need to until the fees start going up and people start complaining, and that's been something consistently occurring in the Ethereum community. You see people complain on Reddit, you see people complain on Twitter that the fees are getting too high, everything's getting outpriced, their dApps aren't working, and then the miners give in, or like they coordinate with Vitalik and whomever, and they just do it. And they say that it is a cap, and they say that it doesn't always have to go up, and they say that sometimes it goes down, but it really only went down once, and if you look at the long-term trend, it's growing, and they're having a backlog right now. I think the other day they were complaining about there being a backlog, and one of the exchanges said that confirmation times were on like a 5-hour delay. And
whoa,
yeah, I don't know the details about it, but apparently one exchange was doing some sort of voting thing, and in order to vote, it required a transaction on chain, and the transactions were set to have a certain fee, and that fee was too low, so all of those votes. I don't know. I really don't know the details. I didn't look into it. I saw that they were having a backlog and people complaining on Twitter. But it's a reoccurrence. It's a reoccurrence that our community is used to and our community expects. And it's a reoccurrence that their community thinks should not be occurring. And that's one of the fundamental differences in the mentality between the communities, which causes this effect of continuously increasing the block size.
Right. So they don't think they should have to pay fees, more or less, or not much. So, but if the block size is bigger, then you can fit more in it and you don't have to pay the fees. But then you just make the centralization worse.
Yeah, that's what
right?
it is.
I'm not making this up, right?
Yeah, no, it's that whatever it is that trilemma. That's what he calls it. He calls it a trilemma.
Oh, yeah.
The scaling trilemma. And, my solution is just focus on security and decentralization and don't focus on transaction scaling at the base layer. That's how I see it. I think that's how many other people within the Bitcoin community see it. But they don't want to do that. They want to scale at the base layer. And I think that breaks the entire system.
Right. Now, and so let's talk about centralization of authority figures here, because you had kind of talked about miners and people complaining and then complaining to Vitalik, and that presents its own huge issues, right?
Yeah. You can't do that with Bitcoin. You can't focus on somebody, and
There is nobody to, there's no board of directors to complain to.
no. And as time gets forward, there's just more and more people, and some people cycle in, some people cycle out, but there's never someone you could point to and just make make a complaint. You can't do it. And a lot of people highlight this on Twitter all the time. People complain, or if there's criticism, there's this one person who keeps on replying to my tweets whenever I criticize Ethereum. And it's just one single person. There's not that many that consistently do it. It's one. And that person always refers back to Vitalik. And I just don't understand how you don't see that that's the issue. There's a fundamental issue here. And everybody outside of the Bitcoin community just seems to ignore it. And you see it in EOS. You see it in
well, any of them that have, it's like you go to the website and here's your team or your board of directors, and it's like, what? Why do you have this?
Yeah, this is what happens when the community gets too big, because it's not a community anymore. And I've even mentioned that in one of my writings. I don't even know which one it was, but it's not a community anymore. It's just more there's no TCP IP community. There's people who use the internet, but that's not a community, And at some point, things grow so large from them being used that the people using them can no longer realistically be considered the community. It needs to start being looked at in a different way. But these other people don't care. And it's fine. It's fine that they don't care, but the system that they're opting to use instead of the one that started all of this isn't going to last in the long run.
The communities, they get big enough and then they fracture, right? And they form sub-communities. And that, in some things, it's, friendly enough. It's just like, hey, we don't hang out anymore. Sorry. And then some things it's more hostile. But, we see that in real life too. It's real life, tangible in person. My church a number of years ago, we're so big that basically you could go to church and see people and never know who they were.
Yeah.
Right. Or we had multiple services, right? So you'd have people that you'd meet in town and they you start talking. It's like, oh, it turns out we go to the same church, but I've never seen them because we're just so big. So we actually ended up branching off and planting. This is besides the point of Bitcoin anyways. I'm just trying to find a real world example, right? Where you have communities that get so big and then they end up kind of separating out into smaller sub communities.
Yeah, it makes sense. But even past that, you have new people coming into the system, not because they were part of the community, but because they're attracted to this new thing that they were lured into without understanding why the original system existed. So you have all of these people you come up with this new ICO, or you come up with this new non-decentralized cryptocurrency, and new people come into the space. They want in on the new Bitcoin. They have no idea what any of this stuff is, and they're not part of the community. They're not. And some people like to act like they have some sort of say, or that their opinion. And I don't know. I don't want to sound the wrong way by saying that their opinion does or doesn't matter, but Bitcoin doesn't require everybody to agree on it for it to sustain itself. Does that make sense?
Yeah.
It works without everybody agreeing on it. And I think that's the best part of it.
Which is funny. I understand what you're saying, but there's also it's funny because there's also this whole idea of consensus where on some aspects everybody agrees, but it's voluntary, right? Here's what Bitcoin is. You can agree and run it, or you can
disagree and do whatever you want.
Disagree and go do something else. It kind of goes back to what you were saying earlier, right? Of having the right foundation and starting off on the right foot. People who never were really into Bitcoin kind of came into Ethereum and have now jumped into EOS, right? If you are jumping into EOS, then I just have a hard time believing that you understand
what this is all about.
Yeah, decentralization and censorship resistance. And I mean, part of the problem too with Ethereum, from what I see, is they're trying to do too much on all the, the magic computer. But, EOS is I don't know. I don't even know where to start. I really don't talk about altcoins that much on here, but
neither do I. I do very minor research to get just the basics when it comes to grasping each one. but I lose interest. Once I find something that like, well, no, just no, like that's what I think in my head. And I just completely forget about it. I stopped thinking, I stopped paying attention to it. EOS was kind of the same way because it kind of blew up out of nowhere. I heard about it. I looked at it. I was like, what is this? This is stupid. Then out of nowhere, apparently everybody was talking about it. The launch was coming up. I paid very little attention to it, but glanced at it. I was like, no. This is just stupid again. It doesn't make any sense.
Yeah, it's like they took the idea of Ethereum and then stopped even pretending that they were decentralized, from what I could tell.
Yeah, that's basically what they did. They just skipped the whole process of becoming centralized, and in a way, they still pretend that they are centralized. And if some people say that there's 300 something validators that vote on the 21 main ones, I'm like, I don't care about that. You could say that every day, all day for like the next 10 years. It doesn't change anything. It's not going to work in the long run. But aside from that, I didn't really give it much look or thought. I don't know the details about how it works, and I don't care.
So let's go back for a second to some of the stuff you talked about on Ethereum. Yeah. One of your things was talking about the blockchain is over a terabyte, but the problem isn't necessarily the block size itself. And you kind of went into the issue of being able to sync. Can you talk a little bit more about that?
Well, it depends on what kind of syncing. That's another thing. We have to be on the right footing about syncing. So
okay.
So you go through this period of downloading all the blocks and validating them, and then you're caught up, and now you're still downloading every block as they come in and validating them, and then you're sharing them with everybody. Like it's really simple in Bitcoin. It's very simple. In Ethereum, there's these different kinds of syncs because there's multiple clients. There's no reference client. And Afri, I think that's how you pronounce his name. The article that my original one was like, I don't want to say mocking, but like re-quoting the title of, that article goes into the different types of syncs and the different types of clients. But it's convoluted, and I can't recall everything that's explained in that article. But like, you can skip the line. You're not validating everything. You're trusting the chain state. You're only syncing every X amount of blocks. So there's a lot of different ways it could be done, and like that's the difference. So
you're basically ignoring the idea of don't trust, verify, and they're taking either a shortcut to the front of the line or taking a modified path to get there, and they're not validating everything in between.
Yeah, so that's pretty much how it is. And when it comes to like the actual data directory size, it doesn't matter. In a way it doesn't matter. In a way it does. In the way that it doesn't matter is because you could toss all that data out after the fact. And a lot of the defenses to my article, where they didn't even read the article, were that like, well, it's not actually this much, it's this much. You could get rid of that, and it misses the whole point. And it only proves that you didn't read the article. And there were so many complaints about it. Like even Vitalik's complaint was that the title was clickbaity. And the title was clickbaity. It was meant to get your attention, but there's still a point to it, because all of that data needs to be checked. So when you start up a node, you need to check that, unless you want to trust what already exists, and you want to trust the limited set of nodes that are there, that you're getting that information from. So again, in Bitcoin, when you start up a node and you go through that initial block download period, you're requesting this data from any random nodes that you're connected to. There's a lot of them. They're distributed. You start up, you find a set of nodes by requesting other nodes to give you other nodes that they're connected to, and you start accumulating this list in your peer's file, and you just start downloading the information. In Ethereum, over time, when that information becomes too large, like that set that you could throw away, that people love to like throw back at you and say you could throw this away, it doesn't matter. You still, like, if you actually want to check everything, you need to go through all of that. And the nodes that have all that information is very limited. In Ethereum, they call those archival nodes. In Bitcoin, we call those full nodes. Now, The argument against that is you don't need archival nodes. You only need to trust the current state. And the issue with trusting the current state is you're still trusting the limited set of nodes that have that state. And then that comes down to not being able to sync from the beginning. It comes down to being able to stay in sync once you're in sync. So even if you use fast sync to catch up, you then have to stay in sync. Because if you fall out, you can either opt to catch back up, which could take time, or you can opt to fast sync again, which only results in the nodes that can stay in sync are the only nodes that matter. They're the only ones controlling the network. They're the ones seeding out to everybody else, and that's extremely centralized. It's not a good way to design this system.
So like an analogy or something similar in Bitcoin to this idea of like throwing it out once you validate it. Is that similar to what like a pruned node does? I don't run mine pruned, so I don't.
Yeah, in Bitcoin you could set your node to prune, and you could set it down to I think even half a gigabyte for the blockchain data, but
then you're not benefiting anyone who comes after you, correct?
I don't think it was always like this, and I don't know if that change was implemented already, but prune nodes can still share the most recent blocks with other nodes. So you're still propagating, and your invalidation of blocks that come in have an effect on those blocks not being propagated to other people. So there is you're still a participating, like a network participating node if you're pruned. Now, I believe I don't think it was always like that.
Okay.
But yeah.
So then back to Ethereum, it's like it's similar but not exactly the same, because they're not even being able to pass that on to benefit the rest of the network. And then, like you say, like we talked about earlier, like if the block size just keeps getting bigger,
that set of
the block size itself, then that set of nodes that's able to do the full archival just gets fewer and fewer.
Yeah, and even if you want to skip the whole full archival, that set of nodes that is able to propagate that information up to pace gets smaller and smaller. So whether it's pruned or not doesn't even matter. You have this situation where just staying in sync becomes problematic over time. And people like to anecdotally point to, well, I don't have any issues doing that. Like so-and-so can sync a node, and they've been staying in sync for who knows how long. They're not having any problems, and they're on this kind of computer with this kind of hardware. And that completely misses the point. The point is the direction that the network is going in. And if it keeps going in that direction without any changes in the protocol, or without any changes in the mentality that this is an okay thing to be, like, without any changes in the mentality that this is an okay thing to be happening, it's going to get worse. Like, that's the point. It's going to get worse. It's going to become more problematic. And the solution to that is sharding, or their solution to that is sharding. And I don't think that that's a good solution.
Okay, so explain briefly, like conceptually, what the idea of sharding is for people who don't know.
Sharding.
It's such a terrible name. They should have picked something else.
So
that's just me, but for the record, shard as in like a piece of a crystal, but yeah, it sounds like something else.
It's weird because sharding can also be defined in different ways, I guess. And
yeah,
just to be on the right footing within Ethereum, within the way that sharding is used by Vitalik and Vlad, who are the two main people really working on sharding to begin with. Ultimately, a shard is its own blockchain. Sharding is when you take many of these blockchains and you connect them together. So the goal to fix Ethereum is to create many blockchains and then have them work together in a network above the blockchain networks, and sprinkle some magic across and it works. But
yeah,
no, what happens is so now that you have multiple blockchains, you have nodes within each shard or within each blockchain that still have to process everything within that shard. But the requirements to be one, and like the delegation process of like which shard your node is working on, is all done by a limited set of nodes that operate on a higher tiered network, which also has its own blockchain called the beacon or the master chain. And
so you have a beacon or a master chain, which is made up of multiple shards, each of which is like their own
blockchain, but
blockchain with its own set of like validator oligarchy kind of thing.
yeah, and in order to be any sort of special node, you have to have 32 Ethereum staked. And like when I highlight that, I think even Vitalik replied, we had this back and forth. I don't even remember what I said or what he said, but something along the lines of, at the P2P layer, which he's talking about the beacon chain, there's no difference in nodes. So whether you're staking or not staking, it doesn't matter. And that's absurd, because it does matter, because like
only the people that are staking can have any effect on whether it's validated or not, right?
Well, what happens is this is why I wrote the article. I wrote the article so I can organize this all, and like.
Well, and I'm glad you did, because it makes my head hurt even just like trying to understand it. It just, honestly, it sounds like a pyramid scheme.
No, you have all of these mini shards, and the nodes that validate those shards are delegated only by the nodes that stake. So even though you have this P2P layer above it where all these nodes communicate and you can share the beacon chain blocks, the beacon chains only have the headers. So the nodes that aren't staking 32, they're not validating all of these other chains. So they have no way to know if the headers are actually validated. And they're not delegating which nodes validate these chains. So like there is a hierarchy here, and this doesn't exist in Bitcoin. And that hierarchy ultimately separates nodes into nodes that matter and nodes that don't matter. And the only ones that do matter are the ones telling other nodes what to do. And those are the ones that are staking. And that's problematic.
And so like on Bitcoin, I guess you could make the argument, right, that if you are not running your own full node and you're just using some sort of client, right, you're at a less tier, or some people have said that's a second class citizen. But the hardware required to run your own node is very minimal.
That's another thing, because you don't need to run your own node. It's fine. It really is. Like, that's the misconception, because it's good to be able to run your own node, and it should be something that's always available if you want to, but you don't need to. And the misconception, like the problem here is when you twist that and say, because you don't need to, we don't need to design it in a way that gives you the accessibility when you want to. And that's like a bad path to go down.
And you talked about this earlier, like that it's that thought process and that philosophy that guides the development that's problematic. And I think this, in some ways, it's not that different from the philosophy that Bitcoin Cash has kind of gone down of, like, does 2 megabyte blocks, does it really make that much of a difference?
No, it doesn't at all.
No, 2 doesn't, but it's just the idea of like, okay, but when does that stop? And we're already at...
Well, it's also the intent. It's also the intent. You have to look at the people who are pushing for 8. Like, the majority of people who are pushing for 8 aren't just asking for 8. Like, they were all supporting Bitcoin Unlimited. They were all supporting changing the rule set to variable block sizes that the miners get to choose. And like the same thing with Ethereum. Like, Ethereum's gas limit is variable. The miners get to choose it. They get to change, the size using a moving average, and then they can just keep on increasing it over time. And it doesn't matter, because you take all, whether it's a set of stakers who all are staking 32 Ethereum, or whether it's a set of miners who are all mining, right? Let's say there's 100 of them, right? They don't have to be all controlled by the same people. They just have to not care about a small percentage. So if bumping up the block size temporarily works for 99 of them, why do they care about the one? the network still works. See, that's another problem, because the network works with one node. That one node can do all the mining. It can do all the, like, Bitcoin works with one node, but it completely misses the point. So,
Right.
like, the 99 miners or stakers don't care about that one. Like when you increase the block size and that one person gets cut off, it doesn't matter, because it's still functioning the same. And then now you have 99 nodes, and 98 of those nodes aren't going to care about one more going off. And it's like, over time, that becomes really problematic, because you keep on cutting off like that bottom 1%, and that adds up. And then you have this centralized network of nodes, and it's just not good. I could break that down even more, but
Honestly, I think everybody who's listening should go read the articles, because, I mean, and you should, like I said, Crypt Economy, he has a couple episodes where he reads through them. But even at that, your visuals are helpful. And so everyone should go read it and at least go look at the visuals, because it does make more sense. And I realize that it's kind of unfair to ask you to explain something that makes a lot more sense in visual format in an audio, in an audio podcast. I don't kind of put you in a hard position here.
No, I get it.
But it's a disaster. Well, okay. So now here's the other thing. Like, with all of this, and people who defend and kick back against you for saying these things, I mean, what's the actual use of Ethereum? Because there's been several things I've seen lately that say, I don't even know how many, whatever the top number of apps on Ethereum, and they just have, like, the actual use is very minimal.
Yeah, there's not that many people actually using it, from my understanding. I think 90% of, like, a month ago, 90% of the transactions that created the last backlog were from a mixer. And what people don't even, like, talk about is that person mixing those coins was willing to spend this much money to do so, to the point where it priced out everything else. And that alone forced them to increase the cap of, like, that alone forced them to increase the gas limit.
Yeah. So it's reasonable then to question, like,
example, but, like, those things alone, like, when they increase the gas limit, they're increasing it because everything's getting priced out. So,
yeah,
like, if they're willing to pay that much, but then you increase the gas limit, what's stopping somebody else from paying that much and just doing it again? What other things exist that people are willing to pay that much to do? How much profit were they making to mix to begin with, that they were willing to spend that much to price out everybody else? So how much more are they likely to go? You can keep on increasing the gas limit, but you're going to keep on running into these issues where more people care about mixing coins or doing this other thing than people are willing to spend on some random little dApp on chain. And it's like, those things are going to get priced out, and that's Ethereum's entire proposition, that these things can work.
Yeah.
And it gets to the point where, like, what function does this network have if it can't do the one thing that it tried to sell?
Now I'm just repeating what you said, but yeah, it doesn't do the one thing that they, the promise, the magic, and the unicorns, and the dApps, which aren't even dApps, they're just apps, because they're not decentralized anymore. And then basically they're choosing not to use them, or they're not able to use them because so much is being spent on mixers, which then causes you to go, like, is it all just about taking people's money on these ICOs, mixing them, and then bouncing?
Yeah, I don't even want to speculate. To me, like, that doesn't even matter.
You're better than I am then, because I'm speculating. But no, you're doing good. You're taking the high road, and you're arguing purely on a technical level. Anyway, well, since we're going to talk about conspiracies, anyways, I need to ask: are you WhalePanda?
Does it sound like I am?
I don't know what WhalePanda sounds like. I've never gone to a conference.
No, you don't have to go to a conference. You just
Oh yeah, he's on the Magic Crypto Friends or whatever, right?
Yeah.
Yeah. No.
He has an accent, and it's not my accent. So
There you go. The world now knows.
yeah, that's
But,
I don't even want to get into that.
I don't even get that. Like, why does it? Well, even if it was true, why would it matter? Whatever.
Yeah, it was funny when that happened. It was funny to say the least. I mean, I made a tweet about it, and like I made a joke about it for like that day, and I was pretty like persistent about the joke. But
Yeah.
aside from that, it's just stupid. It's absurd.
But it gave you another excuse to change your profile picture again.
Yeah, I do that too much. I have profile picture ADD.
Yeah. How often do you change
At
it?
this rate, it seems like once a week. But at least I keep the theme the same now.
Yeah. Yeah. For those listening at home or wherever you are in your car or whatever. Before we started recording, I said I was disappointed that you didn't actually sound like a stormtrooper.
Mhm.
So I was kind of expecting the robot voice, but that's okay. You can be human too.
Thanks.
Yeah. All right. Oh man. All right. So what? I mean, we're gonna kind of get off the Ethereum thing now. I'm gonna give you a break, but so if you had to recommend stuff besides your articles for people to read, just like Bitcoin or just like books, articles, whatever, like this is things that people need to read.
To read.
Yeah.
Well, that's
Doesn't have to be a
it's,
book.
it's interesting because I
Or good sources of information.
No,
Let's just say resources.
I understand what you're saying, and it's interesting because I write things to like be a source of information, but off the top of my head, I don't know. I mean, there's reference links, but if you want to learn, you really have to involve yourself. If you want to learn, you need to become part of the community, and it's not hard. You just make a Twitter account, follow the right people, talk to people, go on to the chats. Just like if you want to really understand the system, you need to put the time and the effort into trying to understand it and in engaging with the people. And it's not hard to engage. So find out ways you can engage and do that. And in that process, you'll be acquiring things to read. You'll come across things as they come out, as people mention them. So,
okay, well, who would you recommend people follow on Twitter then? You said follow the right people.
well, that's another tough one because I don't want to.
Right, you can't. That's not a safe question. It's like, well, anyone you say is yes, and anyone you forget is bad. That's not what I mean, really.
Go to my Twitter and follow everybody I follow. Just follow them all.
There you go.
There
you go.
So that doesn't rule anybody out. That doesn't. It's the least biased way I could answer that question.
What are you most excited for, like development wise, things that are coming down the pipe, or even just projects that aren't Bitcoin, like core technology, but services or projects that are related to Bitcoin?
For the most part, I'm just looking. I'm looking forward to seeing the Lightning Network develop. Nothing specific about it, just watching it grow, watching it eventually get to a point where your phone wallet can just open up. Like you have money sent to your wallet on your phone, and then you click a button and it opens up channels with various amounts of random nodes on the network, and you could just pay any of the major services you want to use instantly. When we get to that point, I think things are going to change.
Definitely.
But as for specific projects, I don't have anything off the top of my head. To be quite honest, I'm not. I mean, even when it comes to software changes and soft forks, a lot of them are interesting. But I think after SegWit, we have what we need. And there's things like signature aggregation, which is great, and I think it's going to open the door for a couple of things. And I think that's what I think we're going to get that along with L2, which kind of helps the Lightning Network, and it doesn't really like these are things that don't break the incentive models of the base layer. So they're great to have, but I'm not super excited about them. I'm just at this point, I'm just letting things happen. I'm just watching everything. I think the contention is over. now that Bitcoin Cash exists. Now that like they have their thing, go play, do whatever you want, you know. Throw in whatever you think you feel might help Bitcoin Cash scale. I don't care.
Yeah, that's why I don't talk about it much, because I can talk about it and I can get irritated and, you know, frustrated with it, but it's really just like a waste of my energy most of the time. So I try and just stick to what's going on in Bitcoin. But yeah, I agree. Like I think not just the growth of Lightning, but as far as like number and volume, but like just it's all these tiny little minor iterations that make it more and more easy, or easier and easier, I guess would be the appropriate grammar. Easier and easier to use, to the point where, like you're saying, right? Like it just does it and it just works. But it's not, and I think that it frustrates me that people act like it's failed because it's not there yet.
It's only 6 months old.
I know. You don't have to convince me. That's why I say I get frustrated with people when they act like that, like the failed Lightning Network, like, you know, like they're Donald Trump talking about the failed New York Times. I'm like, okay, whatever. Like, it's 6 months old. It's new technology. The failed internet, or what?
It's crazy. I like to tweet a lot, but I'm not actually concerned. I everything that needs to be like. I mean, I'll say it again. Now that we have SegWit, everything we need is already there. Like the rest of it is just time. The logic that's required for Lightning Network to work the way we expect it to work in the future. Like people have to point at the UX and like there's problems with like usability. That just comes with time. It doesn't require any incentive changing upgrades to the network. It just requires time, and that's why I've reached the point of like least concern. The only thing going on now is I think Luke and Cobra are trying to push a proof of work change. They just put out some sort of website with slides that reference their articles and tweets, and even that, like people are arguing over that today, and I'm not even concerned about that. We're not going to have a proof of work change. It's not going to happen. We're going to have maybe one hard fork again because of the what is that thing called, the 2038 problem. Like at some point we're going to need to I think it's technically the hard fork doesn't need to happen until 2106, but there still needs to be one more hard fork. But other than that,
okay, and that has to do with what? That
has to do with some sort of Y2K analogous situation with Bitcoin where there's like this bit thing. I don't even like I said, I don't remember the details. I looked it up, I tweeted about it, I completely forgot the details. Like I just remember that we need to hard fork. It needs to happen before 2106, and all that means is Bitcoin will hard fork at least one more time. And aside from that, like I can't even recall it. It sounds like you're looking it up yourself.
Yeah, you heard my keyboard. Yeah, that's my really loud, obnoxious mechanical keyboard.
So I guess just for the listeners, we should get this information.
Yeah, we should say it out loud instead of just reading it. Hang on just a second. See, no universal solution. Okay, but don't tell me that there's no solution. Tell me what the problem is. Oh, okay, yeah. So it's like, it's related to Unix's signed 32-bit integer time format, which causes an integer overflow, and anything over that will like wrap around and be a negative number. So it's a Unix issue, and then because Bitcoin uses Unix time for time stamping, it becomes a problem in Bitcoin.
Yeah. But
yeah, I will find I'll get your tweet and the article and post those in the show notes for anybody who wants to check those out. Bottomshelfbitcoin.com/22 will be the show notes page. So I don't know if we were talking about anything more than that, or we just got totally derailed. You were talking about how you just didn't care.
Oh, yeah. Yeah, so I kind of ended off on Bitcoin Cash, and like now that there are two chains, Like, and I don't want to over-represent them by saying there are two chains. It's a very minority chain.
Right.
But now that minority can go off and do whatever they want, instead of pretending that they have over-representation on our chain, they could just do it and see if it works out. You know, they want to fake and pretend that their chain is Bitcoin. Go right ahead. I'm going to tweet out that it's not. I'm going to reply saying it's not. Like, all I have to do is just counter reply on a tweet. Like, they have to do so much more to prove that it is than we have to do to prove that it's not. And that's why I'm okay with everything moving forward, because we have SegWit. Anything
else you wanted to talk about or wanted to plug?
No, I don't have anything I want to plug, and off the top of my head, no. But again, I'm very bad with thinking off the top of my head, which is why I write.
All right, so everybody can follow you on Twitter at StopAndDecrypt, all spelled out. And if you can't spell that, there'll be a link in the show notes. And then also on Medium, same name, right?
Board on, I think it's
cool.
Twitter, Medium,
Simple.
and Reddit, aside from that.
And Reddit, okay, cool. Stop, thanks for coming on the show. I really appreciate it. I really appreciate the articles, because I learned stuff even about Bitcoin and mining that I felt was really helpful for me. And then also the weird, magical world of Ethereum.
Yeah. Thank you for having me.
Yeah, absolutely.
And I appreciate you giving me the opportunity to prove that I'm not WhalePanda.
Yeah, you're welcome. This was very important. And that is going to do it for our episode today, guys. If you go to the show notes at bottomshelfbitcoin.com/22, you're going to see I also included not only Stop and Decrypt's 2 articles about Ethereum, but there's also an article on there from Jameson Lopp from back when he was still with BitGo, talking about all the issues that he had when they were trying to implement solutions for Ethereum clients with BitGo. So Lopp doesn't work at BitGo anymore. He's now doing more security stuff at Casa, but it's still a great article to read through, or on all 3 of those, I've included the link to Cryptoconomy's quick reads, because if you're not following Cryptoconomy and listening to that podcast, like, you're probably wasting time reading Bitcoin articles, or you're missing out on reading Bitcoin articles. So I definitely recommend checking those out. He's got a great podcast over there where he basically just does a quick read through of Bitcoin articles. So, you know, if you're having to choose between reading Bitcoin articles and mowing your lawn or doing the dishes, now you can do both. You're welcome. So when this episode comes out, it'll be right before BitBlock Boom. So the 14th in Dallas, Texas. If you can be there, that'd be awesome. Holler at me if you're going to be there, and let's hang out. Let's grab something to eat or whatever. Subscribe to the show so you don't miss a single episode. You can subscribe on iTunes or Stitcher or whatever other podcast app you use. Give me a good review. That always helps other people find the show. If you are on YouTube and you like listening to the episodes on there, they're on there. Come out on Thursdays, and go ahead and subscribe and like the episodes on there too. Again, it helps get the show out to other people. If you want to contribute to what I'm doing here, you can. Writing the review is actually really helpful. Like I said, because it gets the word out. But if you want to help financially, you can become a patron, patreon.com/bottomshelfbitcoin, or there's other ways. If you go to bottomshelfbitcoin.com/donate, I've got a link in there to also for you to go buy books, the Tuttle Twins books by Connor Boyack. Those are great books, and I actually had somebody buy through my link the other day. So whoever that was, thanks. But yeah, bottomshelfbitcoin.com/kidsbook. Those are great books about liberty and free market economics and all these things, but presented at a level that kids can understand. They're good for adults too. Like I said, I've said that before. Sometimes they take these really dense books by Rothbard or Hayek or some of these really thick ideas and condense them down to simpler terms. And so even for adults, I find for me, sometimes it's easier just to go through the Tuttle Twins version of that book first and then go back and read the real adult version. So check all that stuff out. This will probably be the last episode for a couple of weeks. I've got a lot going on just outside of the show in my personal life. Good stuff, but just busy. I've got another project I'm working on. I am going to be starting grad school in the fall, and I would like to spend a couple of weeks hanging out with my family and my kids before they go back to school in the fall. So I am going to take a couple of weeks off, and then I will catch you guys in August. All right, until then, from Bottom Shelf Bitcoin, I'm Josh Humphrey. Thanks for listening.